Hi everyone, it's me, your manuishu, and welcome to my YouTube channel, manuishu Acca Classes. So in today's video, we are going to do next question of the consolidated, especially from the long one. So in previous video, I have dealt the two questions. So let's do out the question number third. So Prestend is a parent company of Norton, and following are the statement of financial position for the both companies as at 31st October 20x7. So Prestend is a parent company and Norton is a subsidiary company. So and financial position of the both the company are given. Okay, so let's read out the additional information which is given below the financial position. Prestend purchased 2.8 million shares in Northern a year ago when Northern had a retained earning of 60,000. The fair value of NCI at the date of acquisition was 14,15,000, and during the year, Prestend sold goods with the invoice value 240,000 to Northern, and these goods were invoiced at cost plus 20%. Half of these goods are still in the Northern inventory at the year end. Northern owes Prestend 30,000 at 31st October 20x7 for the goods it purchased during the year. Okay. So now let's move to the requirement of the question. What the question is asking in the task 1, the fair value consideration transferred, fair value of NCA at acquisition, total. So basically goodwill calculation the question is asking in the task 1. Okay, so let's do. Okay, so now before moving to the goodwill calculation, we might require the net asset at acquisition. So let's go to the working from the 1 to 5. Okay. So working 1. So working 1 is basically for the group structure, and here in the question it has been clearly indicated that who is the parent and who is subsidiary. So parent is Prestend, who have acquired the share of subsidiary name Northern, and date okay, date is not given, so it has told the time of acquisition, which is 1 year. Okay, which is told 1 year. It means it might be the 1 November 20x6. Okay, so let's talk about TPC, that stands for total purchase consideration, which means how much parent has paid to acquire the subsidiary. So it has not given in the additional information. Instead, you can look into the financial portion, into the asset section. There has been a heading investments shares in Northern at a cost of 334 by 30 has been taken as a common. Okay. So this is for the working 1. Now working 2. Working 2 is for the net asset of whom? Of subsidiary at fair value, at acquisition, and at reporting date, and difference of both is post acquisition reserve. Okay. And for this, we will first write down share capital at reporting date. It is already given in the question. Just go through the equity section of subsidiary, and there is a share, ordinary share of $1 is the nominal value. So 4,000. Okay, and we will assume it is same at the acquisition date. After that, there is a retained earning heading, so we will also write retained earning. At reporting date, it has been given in the question in the financial position, and at acquisition, it has been given in the additional information. You can go through it that when the retained earning of the subsidiary is 60,000, by taking 30 as common, I will say write down 60. So let's do total. Just wait. In second point of additional information, it has told during the year Prestend sold goods to Northern. It means parent has sold goods to subsidiary. In case subsidiary has sold goods to parent, in that case COP will be deducted from the working too. So we can do total here. And post acquisition reserve 140. Okay. So let's move to working 3, which is for the goodwill calculation and which is a requirement of tax 1 as well. So fair value paid by parent. What is the amount? It has been given in the balance sheet of the parent 3345. Yeah, 3345. Now fair value of NCI. Wait, we forgot to do final percentage. So parent percentage is how much? It has told in the question 2.8 million share has been acquired by parent. So we will take a parent number of shares 2800 and divide it by the number of shares of subsidiary, which you can see in the equity section. The share capital has been given 4,000 having a nominal value 1. So total share will be 4,000. So NCI percentage is 30%. Okay. Okay, then fair value of NCI at acquisition, it has been given in the additional information 1415, right? And we will just deduct less net asset at acquisition, which we calculated above, which is 4060. So goodwill equal to this sum of this amount you will get. Okay. Okay, let's move to the requirement. What the question is asking the fair value of consideration transferred. So fair value of consideration transferred will be 334Y. It means how much parent have been paid to acquire the subsidiary. So 3345. Okay. Fair value of non-controlling interest at acquisition. Add and subtract. Just select on the add button, and it has already given the question 14, 15. So I have taken the 14, 15 here. Okay. Then total. Okay, just add these two amounts and write down in the box this. Then we have a fair value of net asset acquired, ordinary share capital. So ordinary share capital is 4,000. Here we have done. Okay, and retained earning is 60. So total B is 4060. And select a formula for the goodwill. We will just subtract this amount from this. So A minus 100% of the B. Yeah, this will be the option A. Okay. What is the unrealized profit on the intra-group sales? Okay. So parent has sold goods to subsidiary, right? Parent sold to subsidiary. Selling price is during the year. Yeah, it has been given to 40,000, right? Yes. And in these goods were invoiced at cost plus 20%. So I would like to say something. In previous question, there is also cost plus 40%, but there has been told it has been sold at cost of certain amount to subsidiary. It means if parent sold goods to subsidiary and whatever the selling price parent will be charged on subsidiary, it will be same will be the cost to subsidiary, and that amount has been given and also told invoiced goods were invoiced at cost plus certain amount. So in that case, cost means selling price. Just wait, I will move to the question. Yeah, here it is. So here the black sold goods will already cost 12 million to bury. So, but it means subsidy had cost 12 million. It means subsidy has bought goods at the 12 million. So it is a selling price, and this the cost plus 40% means this cost which question is talking about is the this cost which is selling price, so it is a margin. So but here the question has not told such like it has cost this amount, simply told it has invoiced its value at 240,000 and invoiced at cost plus 20%. Here the cost means here cost plus 20% means 20% is markup. In previous question it was margin, because the cost which the question is talking about about selling price. So here the cost which question is talking about is the actual cost and selling price has been given. So 20% is a markup. So we will multiply 20 divided by 120, because in case of markup our selling price will be 120%, and and half of this good is still in the remaining in the inventory at year end, so we will multiply it by 50% as well. So our POP amount is 20,000. I hope you guys got this point. So don't get confused in the markup and margin, especially when the question is given the cost. Just don't blindly think it is a markup. Just read the question full. There might be something else indication, like you can see in the previous question and which we did now. So due to that, please read the question carefully and try to identify whether it is markup or margin. Okay. So tax 3. The parent subsidiary relationship is based on a control. Obviously, which two of the following would signify that one entity control another? Ownership of more than 50% of equity shares. Obviously, if a company owns more than 50% shares of other companies, there will be parent and subsidiary relationship on the basis of number of shares or percentage of shares. Ownership of 40% equity and 80% of preference share. So it will not be the it will not create a parent and subsidiary relationship. Even though it is owning 80% of preference shares, we will only see voting shares. Okay, if parent is owning more than 50% of voting shares of subsidiary, then their parent can exercise the control on the subsidiary. So B is not our option. Ability to exert significant influence over policy. This this happened in the case of the associate. So option C is also not our answer. So power to appoint to remove the majority of the board. Obvious, it can might be parent have a control necessary, due to that it can appoint or remove the majority of the board members. So option A and D is our answer. So task 4, fill the gaps. Complete the working for the group retained earning. The question is asking for the working 5. So working 5. For group retained earning, first we used to take a parent retained earning, right, and which we will take from the balance sheet of the parent, and which is given 5 to 5. 5 to 5. Then we will take parent percentage of post acquisition reserve. So parent percentage you might be required here. That's why I have calculated in the beginning. So 70% of post acquisition reserve is 140 less POP, because parent has sold goods to subsidiary. We will deduct POP from the working 5, so 20. And now group retained earning is equal to okay, 603 I got. So just put the value in the box, yeah, and you can actually do it. Okay, just wait, I will guide you. Okay, as per question, the just write down the retained earning of the parent and subsidiary. Okay, so parent return earning is 525 as per the question. You can see in the balance sheet for both the companies, and Northern company is 200. Adjustment for the unrealized profit. Okay, so here unrealized profit will be deducted from the parent because parent is selling the goods not from the subsidiary. So that's why here the option all has been created. So we will deduct cost from here, we will minus 20 and click on the subtract button. Write down 20 here and subtract. Then pre-acquisition retained earning. Okay, so it basically the question is talking about the here distributed pre-acquisition retained earning. Okay, pre-acquisition retained earning means subsidiary retained earning at acquisition, which is 60. So write down 60 on the subsidiary side. Okay, and just click on the subtract because we use, yeah, so that we could have a par value, because par is the difference of mainly the difference of the retained earning at the reporting date and at acquisition date. Share capital is same at the both date, but par which we calculate is due to the difference between the retained earning. That's why we will keep the subsidiary retained earning at the reporting date here, and pre-acquisition retained earning means the retained earning at the acquisition date here, and we will just subtract it, and we will have a par amount which is 140 in this box. So then apportion it between the, just wait, yeah, and just apportion between what is the parent portion of those par. So right, just wait, I will explain you by doing here so that you could have a clear picture. Okay, so as per question, and here question is, I will write in the shortcut. Okay, here P and 30 take a common. P means parent and Northern and 30 I will take a common. Okay. So as per question, the retained earning of the parent is 525 and subsidiary is 200, right? And adjustment for unrealized profit. I will write in the shortcut. Just understand what I'm trying to say. So unrealized profit, we will, here option is having or in between this. Yeah. So we'll basically deduct it from the parent because here parent is owing the goods to subsidiary, and that's why we will here write down 20, and here we will subtract. Click on the subtract. Okay. Then pre-acquisition retained earnings. Pre-acquisition retained earnings, we will keep here value 60, which is given in the additional information. We will just write down 60 and here just click on the subtract button, and after that total Northern, we will just subtract this and this, so 140. Now GROUP group shares of Northern in P. So we will just take 70% into this amount. We will have a 98. So group retained earning equal to 603. Okay, I hope you guys got my point, what I'm trying to say. Just replay the video in case if you still have a confusion, and even if it won't get solved, try to just leave a message in the comment box. I will try to help you. I will help you. So okay, so next video we will do this Leverton and Evalpool question. So thank you guys for watching my video, and if you are watching my video for the first time, please like and subscribe to my channel and share it among your friends so they could also have the benefit, and don't forget to hit the bell icon so for the more updates. Okay, so thank you.